Good morning, everyone. Welcome to our Tuesday morning trading room. I hope you enjoyed your time off. It was incredibly hot here in the Pacific Northwest, uncomfortably so. Temperatures all in the mid-30s on the Celsius scale. That's pushing 90 degrees Fahrenheit. That's hot for this neck of the woods. Sure, Andrew. Andrew asked, Eric, can you put up the 6E Hawk chart for a moment? Let's take a look at the euro before we get too much into the NASDAQ. It's taking a moment to load here. There we go. All right, so here is the euro dollar, the 6E. This would be the equivalent to the euro US dollar pair for those of you trading the Forex markets. And it's looking like a rather quiet start to the day. We had a first micro-macro cross sell here, went lower, hit its profit target, the macro pullback, no follow through on that. Another failed first micro-macro cross and a couple micro-macro crosses to the upside that are not tripping. Oh, I see. Andrew says, for some reason I don't have 5 digits. So I'm guessing back here. That might be under your properties window. Nope, it's not. Maybe under the data series. Have you tried refreshing your screen? You can reload your historical data and reload your NinjaScript. Who is your data provider, Andrew? Andrew says, yes, he did all that. That's what my was. Rhythmic with AMP. Okay, Rhythmic should be clean data. Well, it's all clean data, but it should be good data. I'm running Continuum. I suppose you could put in a call to them and ask them what's going on. But short of refreshing or even rebooting your NinjaTrader, I'm not sure what else to suggest. Because we don't have much control over the data itself. Oh, that's odd. Andrew says it's fine on another PC. Well, what you could do then is you could send an email to Ben, and I'll give you Ben's email here. And you may ask him what's going on if he has any suggestions. That is a little bit of a mystery, I have to confess. All right. right, so here we are now with the NASDAQ, my personal favorite. And we've got a market that's looks like it made a little bit of a run up out of the gate. Well, it's not shown very well here. This is the electronic trading on Monday, and you can see that's why you don't bother trading holidays. This would have been very, very thin. Actually, a few more traders showing up than I thought, but the volume on the bar is very thin. This is where we left off Friday, around the 59.90 area, and we're opening 59.70-ish. So we had a gap up here. It looks like the market tried to fill it, got as high as 59.82. I think that would count. Now we're just kind of looking to settle in. The trade forecasts are saying we are or should be in trend mode for a little over 2 hours. Well, that would be nice. We're working a first micro-macro cross signal to short here on the Hawk. Halfway through a trend change signal on the Falcon. That means we should be getting a cloud crossover signal here on the Raptor as well. Here they come. All right, there it is. I'm just going to hit the sell order, and I'll place my stops just above the median line here in case there's a little bit of a reaction. That unfolded rather quickly, but you could see, we were there to anticipate it. And we're getting a pretty decent move lower so far. Stops at break even. Hopefully we don't see a reaction just yet. And I think they slipped me a tick or two on that one as well, on the entry. So what happened there? Oh, I thought I had two contracts in play. I only had the one. That's okay. Wow, there they go. I really wanted that runner in play. Oh well, we'll just have to wait for the next signal. So it looks like all our signals had good follow through. We had the first micro macro cross building right here. Great follow through on that. Come back with here with the Falcon trend change signal. That, of course, coinciding with the #1 signal. And in hindsight, this was a lot easier to see than real time, but there's your eagle signal. You could interpret this as a green bar sell, but I'll admit to you it did not strike me that way, even though it had very, very good follow through to it. Problem when the market comes down so far, I don't think the challenge today is in the direction. I think after a move like that, we can be reasonably confident the market's going to be in a bit of a downtrend today. The problem we're having is, where do we cover the trade? Here we're working a very nice 4-arrow consolidation. It's going to turn into a macro pullback. We don't have the 4-arrow consolidation just yet. There's only 3 arrows. Or 3 signals, 1, 2, 3. The 4th one is the one that we're going to be most interested in. Okay, so there's the 4th. Well, where do I cover this trade? Right? Can I cover it all the way up there? Ooh, that's a long ways. That's a long way to cover, and yet that's probably where I need to cover this trade. Okay, now it's moving into a macro pullback, and I think what I'm going to try to do is run this one out. If I'm going to have that kind of money in play, so we've got our trend line touch signal here on the Falcon. Just a basic continuation signal on the Raptor, not one of our high probability signals, but just a, like I said, a basic signal. Well, now I'm starting to wonder whether the sellers really have it together today. So I'm into a macro pullback and a 4-arrow consolidation, and I have to keep adjusting the trade here as the market is trying to move a little bit higher. This is quite the pushback from the buyers, by the way. We do have a little bit of a double bottom. There is our 4th arrow. Okay, there's our signal. No time for me to adjust the trade in there, but Floyd's watching crude oil. He says, you missed the 6 a.m. move on crude. I did too. Big move out of the open there for crude oil. Right here. Big rally up. So crude looking a little bit stronger the last few days. Okay, gotta see the sellers push back now. Oh, that's a little bit of a rally. Yeah, you can see the problem trying to cover a trade that has made such a strong move one way or the other. Your stops are just so far. The ideal placement actually would have been above the high of the morning. That would actually give you enough staying power. So we had a trend change signal here on the Falcon off of that little double bottom. Same time, more or less, we got our number 2 signal here on the Raptor. And now we're starting to work a first micro-macro cross higher. But we are back into the hard edge, so I'm hoping we're going to see a little bit of a reaction here somewhere. So here on the Raptor, if we, okay, so the first micro-macro cross higher there now, if we come out of the hard edge, and it actually manages to bounce a little bit lower, that will produce a number 3 signal. That will be our continuation signal, the hard edge bounce. The buyer's still pretty strong. Still trying to rally this market up. All right, we're still producing some warning dots, but these are buy warning dots. But we are into the hard edge, so I'm looking, as I said, for a reaction to encountering the hard edge. Let's take a look here. So the median line, 59.73 quarter. No, they're going to push right on through that. That's where my stops are at. The sellers never really showed up through here to give me another chance. All right, well, a little bit of a pushback. The sellers owe me one more move lower. I'm sure of that. It's just whether my stop is going to hold. Like I said, realistically, what I should have done is put my stop above the high of the morning. That's actually the proper stop. And Trade Manager probably would have told me, hey, Eric, you can't afford that, in which case I, should have passed on the trade. But we'll see whether the big stop actually gives me a second chance here or not. Because what started as a bear market has now turned on its heels and it's a full-blown bull market. here we've got the Raptor working a cloud crossover. The clouds are crossing, not totally crossed yet, but once those clouds cross, we anticipate a little bit of a pullback here. That should bring the market back into the clouds. And if the trend is going to continue, then we're going to see a buying opportunity. And that would be the number 1 signal. Wow, the buyer is just crazy strong this morning. All right, there's the beginnings of a pullback. It's very, very early. The market pretty much retraced the earlier move down, and now we're producing like a macro pullback signal here on the hawk. We're in the middle of forming a possible late filter entry on the Falcon. well, the hawk actually dipped into yellow bars. This still would qualify as a 4-arrow consolidation, so we're going to see at least one more push higher here, I think. The Falcon now spoiling that late filter entry signal. And what I'm looking for here on the Raptor is a pullback, the market to emerge with trend, and that should produce a number 1 signal. This is, of course, where the sellers started their day. Okay, the Falcon a little bit teeing up here for a possible trend change signal. We're now getting the counter move. So we do have some mixed signals here this morning. Here's the number 1 signal on the Raptor that we were looking for. You do have the opportunity for a second push entry. Ooh, but that's getting to be a little bit out of reach for me. Can I cover it there? I can. Now this is not what I would call the highest probability setup. If we break the highs, I think we'll be okay. All right, so the second push entry, kind of keeping me on the right side of the market so far. This technically is a number 2 signal, by the way. We've had a trend, a retest of the extreme, and now a signal to short. That has all the components for a number 2 signal. But the trend does seem to be up, so I think we'll be better off trying to stay with the trend, even though my stops are relatively tight. I hate buying near the high of the morning too, by the way. That's why I said it's not an ideal setup. Actually, it's far from ideal. What you want to do is, oh, maybe this is going to be a double pullback. All right, well, we'll put that on the shelf. Everything else kind of in limbo at the moment. You can see the Falcon here. Trend line is breaking up, filter is breaking up. This has got a similar problem to the hawk trade, but in reverse. The actual stops should be way down here, believe it or not. Because we very well could see a pullback back to the even halfway through here, like 59.65. This, by the way, confirmation yet of the number 2 signal, so another attempt by the market to head lower. You can see the background highlights. There it is. There's the number 2 signal. All right, so I will cancel that for the moment. And we'll see whether we come out of here with maybe a hard edge bounce on the number 3. Oh, here they come. They're trying anyway. So we're kind of playing around the median line a little bit. Like I said, the sellers owe me one more move lower. I find it hard to believe that this is it. I suppose you can make the case the buyers owe us one more move higher as well, so it's really balanced market at the moment. All right, so here's the hard edge buy. I'm just going to hit the buy order. So that's the number 3 signal. Just as I said, trying to stay with the trend. I take my stops at least back below this little swing, although like I said, the real stop should be down here below the low of the morning. That's the proper structure of the trade. so we got our profit objective. Come on. See, the auto break even is going to be too quick here. If I hold, well, it won't allow me. I was going to say, if I try to hold my stop back here, the original stop placement, on the next push higher, that would actually be the time to roll your stops. Yeah, Andrew says, if you want to know why the NASDAQ is so reluctant, take a look at the E-mini. He says it's quite schizophrenic, and that might be the right word for it. The E-mini, definitely in a sideways churn today. All right. Are they going to let me ride out this swing? I've mentioned this before, but really your most difficult task as a trader is determining the trend. You need to try to figure out which way the market is going. Duh, I know, but it's a lot harder than it sounds, as you know, is evidenced every day here in the trade room. Once you figure the market has settled into a direction, you should only trade that side of the market. If you think the market is without direction, even a minor direction, then you can trade both sides. But we saw the market come out of the gate early, big move down, turned on its heels, so to speak. We did get a little test of the extreme there, making a little bit of a double bottom, turned around, and now it's made a full-on reversal. So while the market started very bearish, I think we can all agree that it's turned more bullish, and we should look to stay bullish until it turns around again. And it's looking like the bullishness is starting to wane a little. This sideways, more sideways trading than up. No, they're not going to follow through. Come on, get up there. Okay. Oh, and here now we come back with a number 2 signal. So now this is interesting. We didn't follow through to the upside. So now we come right back with a counter trend signal. Now this could well be the second attempt by the sellers to move the market lower. So our target for this counter trend trade, the hard edge, of which we are pretty close. And like I said, I wouldn't be surprised even if the market came halfway within this trading range here between the median line and the primary support. That would peg us somewhere around 59.65, it looks like. I didn't expect that number 2 signal to come about quite so fast. Okay, so we've tagged the auto break even. Oh, really? They're just sitting there above my profit target. Look at that. Just need 2 extra ticks. I'm sure I will get it. I'm pretty confident they'll give me those couple of ticks. There we go. Okay, I may move into something more aggressive like the parabolics for the remainder of the move. So I guesstimated about 65. We're almost there. After that, it would certainly bring the primary support and the lows of the morning back into play. Come on. They're thinking about it. Okay, so they made it down to 65. And a little bit of pushback maybe from the buyers, but nothing substantial just yet. Watching the Geiger counter here, and that's significant, that pushback there. Okay, I may roll my stops in a little bit tighter. I suppose 59.60 would be a little bit of a what they call psychological support. So I went to the tighter stop strategy because the Geiger counter keeps pulling over here to the bullish side and staying. So I'm trying to protect as much open profit as I can. The parabolics would hold me back here. All right. Well, let's see here in a moment whether the parabolics would have held me in. No, I would have been stopped out on the parabolics as well. So picked up another dollar or two. That's how the Geiger counter was actually developed, to help you gauge when you should be more aggressive with your stops, when a trend may be starting to top out or bottom out. Well, that was a very decent move lower. And now you can see we're pulling back into the cloud, and we may come out of this with a number one signal to short. So the market's very, very balanced here at the moment. Made a move higher, made a move lower. This could look like a doji bar on a daily chart. All right, so the buyers owed me one more move higher as well. That was the sellers coming through. The buyers also need to give me at least one more bullish push. Andrew says the range of the E-mini is nothing major, and that's actually one reason I prefer the NASDAQ. Hold on one second here. So you can see the E-mini pretty much range bound. Here's the high of the morning, here's the low of the morning. Haven't really traveled much outside that range. The mini Dow, that's the YM, will probably follow the E-mini closer than the NASDAQ will. The NASDAQ, of course, a few more tech stocks, and it does kind of move independent at times. Although, in the long run, it will come into sync with the other stock indices as well. All right, you Raptor traders, I know there's a few Raptor traders in the room here. We have moved back into the cloud. Clouds are about to cross. We're going to produce a cloud crossover signal. Now, again, the ideal stop should go up there, but that's going to be a little bit out of reach. Just be aware that anything tighter than that, it could be a little problematic. If you chose to risk it here above the median line. And I'm anticipating that the signal is going to print here, and it turns out that it did. And they slipped me a tick too. Look at that, stinkers. Let's see, am I going to be? Oh, they slipped me a couple of ticks. Let's see if I can get my ticks back. There we go. They keep hovering above my break-even trigger. There we go. Whoa, that was a quick move lower. Had I not adjusted my profit objective here to get me back to my $100 profit target, I would have been filled on that quick little hiccup. Buyers getting really sticky around 59.60 now. Stinkers. Backed up just enough to hit my break-even trigger. They may try to head lower one more time, give me another little test of the extreme, and who knows, they may try to rally up from there again. I guess, all things considered, I should have just taken my scalp target. Put the money in the bank. Nothing wrong with that. Yeah, see, so there was just that little hiccup. They would have come down, hit my profit objective. Scoundrels. It's looking like the E-mini is getting a little bit of traction now. Produced a counter trend signal, and in all honesty, this would have been a very difficult signal to get a handle on. There's no trend preceding it. Counter trend signals require two things. They require a trend and a test of the extreme to show you that that trend is no longer a trend, but in fact the market might be turning. But it did pick the signal, and it did get back to the hard edge. But like I said, that's one of those signals that I can point out to you in hindsight. But real time, honestly, I would not have been on that one. I'm a little bit choked now at my number one signal because we saw it coming. We got in. That little hiccup there cost me. And now the market continuing to the short side. Probably see a retest of the lows of the day, I would think. That after all, that's where the buyers got in before. So we're getting close to that with the primary support line. Lows of the day just a few ticks past that at 59.50 3/4. Maybe we're going to look at a market that's just in a great big trading range today because we had that early move down, the pushback higher. Now we've got another move down, each leg recovering the range of the last. So does that mean we're going to get a buyer's push now? It certainly is possible. Well, we're just kind of stuck now. Seems the market's not wasting much time getting to the support and resistance areas, and then it drags its feet for 10-15 minutes before doing something again. All right, a little bit of a bullish pushback. We've actually changed the bar colors here on the Raptor and the Hawk. Hey, way to go, Andrew. Andrew says, I'm done. $245 on the NASDAQ. Happy with that in this market. Time to turn it off. Well done. Yeah, no kidding. In today's rather choppy / sideways market, that is nothing to sneeze at. Good job. I suspect these yellow bars, the Geiger counter kept pulling, see, it's pulling over to the hard side again, to the buy side. I'm thinking we're going to see a little bit of an uptick here. You do have a double dot signal on the Falcon. This isn't a signal I focus on very often in the Falcon because it is counter trend, but it happens when you get double dot signals. You get buy dots forming in pairs. This one has got 1 bar separation. That's okay. Ideally, you want to see them like this, form right next to each other. And they'll form in pairs, sometimes even in threes. The criteria, however, is that before you can take a counter trend is you have to be able to tie it back to a reactionary move in the history of the chart. And you can see we don't have to look too far back, and that's ideal as well. We can say, okay, well, last time the market was down here, this is what happened. So it's reasonable to assume that we're going to get another buy. So those are the components to a double pullback signal. But like I said, it is counter trend. It's always riskier going counter trend. For that reason, you should probably just be happy if you can get a scalp target rather than a full-blown reversal of sorts. Andrew says you might not like this idea, but I use a 1 minute and 5 minute stochastic, and if the DTS chart is not in sync with those, then I found it best to miss the trade. Andrew, that is perfect. No, I don't mind that at all. And hold on, if you bear with me, I will attempt to demonstrate what Andrew is talking about. So I'll do it on the 5 minute. Andrew says he's running it on a 1 and a 5. But all right, so here's your 5 minute chart. Andrew says he likes using stochastics as a confirmation. So I guess before Andrew would look to buy, he would like to see bullish stochastic crossover. Before he's selling, he's looking to see a bearish stochastic crossover. And he takes that in sync with the signal that he's getting. So you're getting like a green bar sell, and I guess if the 1 and 5 minute stochastics were both bearish, that would be Andrew's confirmation. I know Floyd, you shared earlier as well. Oh, Andrew likes the fast stochastic. All right. You're one of 2 people I know who actually use the fast stochastic. The fast stochastic, as the name suggests, a lot faster, a lot more sensitive. And I was just about to say, Floyd shared one day. Floyd likes to use. I think Floyd, you're using the ADX, aren't you, to determine trend? and you like to stay in trend with the ADX indicator. And all those things are fantastic, folks, so long as they help you make a decision. You know, the danger comes when you start putting too much stuff on your chart. I had an email just the other day from someone saying, can I run a 5-minute chart alongside, or should I run a mean Renko chart? I said, why don't you run both? So long as the information you're getting off of your chart, your additional information, is not clouding your decision making, then it's okay. The danger happens, and we've all been there, where you get so absorbed in the process of tweaking and adding indicators, because I guarantee you it won't be long. You go from here, next thing you're going to read something about the Arun, and you're going to throw Bollingers on here, and before you know it, this is what your chart's going to start to look like. And you're going to have a heck of a time making trading decisions, analyzing all this stuff alongside your DTS. Is DTS right 100% of the time? No, obviously not. This won't be right 100% of the time either. Your objective, believe it or not, your objective is not to be right 100% of the time. New traders are always obsessed with perfection. They think if they could just eliminate those losing trades, they will make money. No. I've shared this before. One of my best trading months ever, I was only right 40% of the time. I was wrong more often than I was right, and it was one of my most profitable months ever. Now, granted, if I had been right 50% of the time, 60% of the time, 70% of the time, I would have been even more profitable. But the point is, it's not the winning percentage. For those of you new in the room who haven't heard my story yet, I can show you a 98.5% winning ratio on the E-mini S&P. Yes, it is true. 98.5% of the time you will be right. One sec here, I gotta build an E-mini chart. Sure, here we'll do it on the 1 minute. Okay, here's the E-mini chart. 98.5% win ratio, nearly 100%. You trade, how do you do that? You trade for one tick on the E-mini. Big deal, right? Sure, you're right, but you're not going to make any money. You'll make $12.50. You'll owe the broker $4 or $5. The rest, or almost all the rest, will go for exchange fees and whatnot. So you may walk away with a couple of bucks, not even enough for a cup of coffee, never mind to make a living. Now, you may say, well, I'll be like one of those high-frequency traders and trade 100 lots. Okay, if you can afford to do that, however, you get a lot more bang for your buck trading something like the NASDAQ, trading 2 or 3 times a day, throwing your 100 contracts on there, and you'll still make more money. So here we are. Watch, we'll see if we get a breakout. Oh, there's the 1 tick break. Hooray, we made 1 tick on the E-mini. We were right yet again. But you can see how just being right doesn't make you any money. No, to make money you need to, obviously you need to be right, but you also need money management, and you need risk management. And by that I mean you need a way to manage your trade, either via high probability profit objectives or one of our various stop strategies that you have available. And you also need to control your risk. You cannot risk more than you can afford to lose. If you do those three things, you'll probably find yourself on the right side of the market more often than not. Steve. Steve's the comic in the room here this morning. Steve says, I have a great trend indicator. When I make a trade, the market goes the opposite direction. There were, this is going back probably about 15 years or so, 15, 20 years, long time anyway. I had the same feeling as Steve. In fact, it got to the point where I would occasionally fade my own signal. So if I had a buy signal, I would actually sell. I really thought the market was out to get me. Great question here from Andrew. Andrew asks, Eric, for your personal trading, do you do top-down analysis or jump straight in with the DTS chart and take the signals? I try to do top-down analysis, and I think what Andrew means by that is, do I step back, I take a look at the daily chart, I'll even look at the weekly in some instances. The daily will definitely have a bias on the day. So, one second here while I get that NASDAQ chart. I should have just left it. So if we take a look at a NASDAQ chart. So here's a daily NASDAQ. I always in the back of my mind, I try to stay aware of the overall market bias. So I think the really big picture, the market is bullish. I think that's a pretty safe bet. I think even short term, the market is bullish. Today, obviously, a little bit more bearish, but I think the opportunities are still going to be on the buy side. And I pointed this out the other day as well, but it bears repeating. Let's say you saw this bar form. You were trading this day, and you thought, okay, this market has gone from a bullish market to a bearish market. Right? Whatever your analysis was, let's say you did a trend line like this, and you say, yeah, okay, the market exhausted itself. It's in a bear market. I'm now going to sell. I'm going to have a selling bias on my days. The next day finished bullish, but look at how you would have done. The market opened here. You still had lots of selling opportunities before the market rallied. The next day, same thing. The market opened, lots of selling opportunities before it rallied. The third day, huge seller's day. The fourth day, another good selling day. The fifth day, another good selling day. This is the only day you would have had very limited selling opportunities. You may even have ended up with a small loss. Next day, the market comes back. The day after that, again, very limited on selling. The day after that, by now you should be starting to wonder whether or not the sellers still have control. But my point is, just by staying with one side of the market, you would have stayed with the overall market direction. So the next day, good selling day, good selling day, good selling day, good selling day, moderately good selling day, very good selling day, another good selling day. And then the bias starts to shift again. It starts to become a little bit more balanced. A selling day, yes, not exceptional. A decent selling day, no selling whatsoever. on this day. Moderately good selling, and by this point, if you're looking at your chart again, you may be saying, oh, well, wait a minute, it looks like the market's starting to get a little bit stronger. Maybe now I'm going to have a buying bias. So the same thing happens when I look at the chart here. I look at the chart and I say, yeah, okay, it's obviously strong. I'm going to have more of a buyer's bias. And Andrew says he goes down to a 4-hour and an hourly as well, which is fine. You can do that as well because it gives you you kind of zero in on that. But let's say I just look at the daily and I have a buyer's bias. How would I have done today? Well, here we'll just focus here on the Raptor. So out of the open, I would not have had that short signal, that number 1 signal. But I would have had this number 2 signal. That worked out very well. I would have had this number 3 signal. That worked out to its profit objective anyways. I would have ignored the sell signal, and now I would be looking for another buying opportunity. So there's something to be said for trying to stay with the trend, however you perceive the trend to be. You know, looking at the hourly chart, the trend will be different than looking at the daily chart. But let's say you deem this now to be a number 2 signal, right? We have a buy signal, we have tested the extreme, we have a trend that we can trade counter to, and we have an overall bullish bias. So maybe I'm going to be a little bit more open to a buy signal here. It hasn't printed as a number 2 signal because it's a little bit more drawn out. But that's the gist of it right there. And if you do that, if you've had losing days, and you were smart enough to keep a trading journal, see if you can't identify those losing trades and how those trades were relative to the, I'm going to call it the dominant trend, the underlying trend. Not the immediate one that you see on your chart here, but if you go back, if you step back a little bit. Well, that was an excellent question, Andrew. Thanks for asking it. And we'll close out just with this last thought. One of my favorite traders that I've learned about, his name is Ed Sequoia. Interesting fellow and well worth investigating. But I remember reading how he would actually take his charts, and these were still back in the days of paper charts, and he would put it up on the wall in his office, and then he would go and stand on the other side of the office and look at the chart. And the sole purpose of that was to determine the trend. You know, he didn't want to focus on the last few bars. I've shared this with you before as well, how many people send me a snapshot of their charts and it looks like this. And it's like, really? How can you trade like that? Oh, well, I have to shrink my chart like this because I'm also watching gold and oil and the euro and the British pound and this, that, and the other thing. Listen, folks, you don't need to watch a half a dozen markets to make a go of it. You just need to find one market that gives you a reasonable amount of signals. My personal favorite, the NASDAQ, of course, but whatever market you're comfortable with. And then try to discern what the trend is, and then try to trade with the trend as much as you can. Are you going to miss moves? Yes, definitely. Are you going to take bad trades? Yes, definitely. Welcome to trading. All right, and on that note, we'll button up shop here for the morning. I will see you again tomorrow on Wednesday. Have yourselves a wonderful day. We'll talk to you soon. Bye for now.